Why is every monkey in the jungle in such a bad mood today? It's not just the rain. Last time Monkey explained why bananas lose value over time. Inflation. Prices go up and each banana buys less. Today Monkey explains the other problem that hurts just as much. Interest. And why borrowing bananas suddenly feels so painful. Let's start simple. Imagine Monkey needs bananas now. Maybe to fix the treehouse. Maybe to start a small banana juice stand. Monkey doesn't have enough bananas today, so Monkey borrows some from another monkey. Simple deal. Borrow 100 bananas now, give them back later. But here's the catch. The lender monkey says, "Sure, but you don't give me back 100, you give me back 110. Those extra 10 bananas are interest. Interest is just the price of renting bananas that aren't yours. The longer Monkey keeps them, or the riskier Monkey looks, the more extra bananas the lender wants. Now, interest isn't automatically evil. It exists for a reason. If Monkey lends bananas, Monkey can't use those bananas today. Monkey takes a risk. What if the borrower disappears into the deep jungle? Interest is the reward for waiting and for taking that risk. So far, so good. But things get messy when interest rates get high. And that's what's been happening. To understand why, we need to talk about the biggest monkey in the jungle, the Banana Central Bank. Some monkeys call it the Fed. This monkey controls how many bananas exist and how expensive it is to borrow them. Remember when inflation went crazy a couple of years ago? Too many bananas were chasing the same coconuts. Prices exploded. To slow things down, the Banana Central Bank raised interest rates. In jungle terms, borrowing bananas was made expensive on purpose. If borrowing hurts more, monkeys borrow less. If monkeys borrow less, they spend less. If spending slows down, prices stop rising so fast. And it worked. Inflation cooled down, but now the jungle feels the side effects. Higher interest rates affect everything. Credit cards are borrowed bananas with very high interest. Those bananas have babies, and they multiply fast inside your debt. Treehouse loans work the same way. Higher rates mean much bigger banana payments every month. Even businesses feel it. Fewer treehouses get built. Fewer monkey jobs are created. The whole jungle slows down. But here's something many monkeys forget. Interest rates don't just affect borrowing. They affect saving too. If Monkey puts bananas in a safe place that pays interest, the banana pile grows faster over time. That's why the Banana Central Bank has to be careful. High rates help control inflation, but they make life harder for borrowers. Low rates make borrowing easy, but they risk letting inflation roar back. So where are we now? Inflation cooled off. The Banana Central Bank has started lowering rates slowly, very slowly. Because if rates are cut too fast, monkeys might start borrowing and spending like crazy again, and inflation could bite back. So what should a regular working monkey understand from all this? First, interest isn't random. It's a tool that controls how fast the jungle moves. Second, when interest rates are high, debt is dangerous. Borrowed bananas can eat an entire plantation. And third, interest works both ways. It hurts when Monkey owes bananas, but it helps when Monkey saves wisely. Interest decides whether bananas multiply or disappear. And in this jungle, that makes all the difference. Stay sharp and protect your bananas.